Okay, first things first, respects to you for clicking this super long, unedited video. Actually, I don't even know if it's gonna be long. But respects for you for clicking this video because you're here to learn and not get brain fucked and just used for views and subscribers. Okay, I'm gonna be straight up with you. I don't really like to edit my videos for these types of content. I want to keep it straight with you. It's not gonna be what you think it is. So about me, basically, before we continue, let me talk about me. I've been trading for less than a year now, right? And I've finally become profitable in the sense that I'm able to see more, and I haven't lost a trade on demo in a while. So I'm about to apply for my second funded, and I hope I will succeed. Actually, I know I will succeed in this one. And the reason why I stopped losing my trades is because I found a way to understand liquidity sweeps that I don't see taught anywhere else. I haven't seen this yet. There might be a video, an underground video like this that is out there, but I haven't seen one yet. And the reason why you should listen to me, basically, I am near your level. Okay, maybe I'm just a bit above you since you're watching me right now. I'm teaching you, just a tiny bit above. So basically, I know the struggle that you're feeling. I'm not gonna give you advice which super profitable people do, because that's not what you should be doing. You should be doing what they were doing, reaching that point. It's the same thing as a business owner. You can't be doing, you can't own I don't even know, like an airline company, because like there's somebody super successful when you haven't seen the many companies that he's built to reach that point. And I don't have anything paid for, so I'm gonna make this video straight up because I am talking to the me from a few months ago that was I had sleepless nights trying to understand this stuff. So let's hop into the trades. This is not fake. These are my past few trades. I even have one going on right now, but the market's closed. It's Friday. Um, I could erase all of this and show you how I did this, how I found these strategies. So the first thing I did, okay, the first thing you should do is understand what liquidity is. Liquidity is areas where business actually took place. So swing traders or retail traders, that are a little bit less educated than us on the market, the people that have their 9 to 5 jobs and they come home and they decide, hey, I'm gonna trade a little bit today, see if I can make a little bit of money. They don't know the ICT concepts, etc. They just know the straight basics. They trade based off of trends. So let's say I'm gonna place like a random position here. Most of them will put their stop losses above certain areas and then target something. So they would have a stop loss on here, for example. They usually place it on the swing highs. So we could take this to advantage because now the market movers, the hedge funds, the institutions, the algorithms, they're trying to push it up into there, take out the stop losses, and continue its trend. So that is what you got to understand. It's pretty basic, but you just have to understand it. For me, this strategy works the best on gold. I've seen more positions on gold. I don't know if it'll work on any other any other currencies or even indices, but I know straight well that on gold I've had a really high win rate. So what I did, the first thing after understanding, I hopped onto the 1 hour. So I'll show you two occasions that could happen. This is what fucked me up a lot. I would have thought this right here would have been a sweep. Maybe I think this was a news event. Yeah, so never mind. I wouldn't have thought that this would have been a sweep. But let's look at something that wasn't a sweep. Let's look at this. So I would have thought this was a sweep. If I hop onto the 15 minutes, where did it go? I would see like a move up and then a quick move down, right? And I would have started selling here. But the thing is, that's not a sweep. That's a run. That's a liquidity run. There's two types. A liquidity run is when it passes the point where you think it's going to be swept. And that messed me up so many times because I thought it would have swept it. So I placed a short or a long, but then it just kept continuing in that direction. And I've lost many trades because of that, because I did not understand how to actually find a sweep. So let's look at a few. We hop onto the 1 hour or even 4 hour. So what I would do, let me just find a pretty good example. Now I kind of regret erasing the stuff because I can't find my examples. All right. Give me a second. I'm going to pause real quick. Okay, to make it easier, I just brought back my drawings. So first thing I did was spot out any fair value gaps, because fair value gaps are used to find out high probability liquidity sweeps. Here, I found a pretty good example. So fair value gaps are used to find high probability liquidity sweeps. So if a potential sweep is within a fair value gap on the 1 hour or the 4 hour, most likely it will respect the sweep. So over here, do you see how this prominent low is within a fair value gap? Most likely it will sweep. So you can even erase the fair value gap now and keep the low here. Most likely it will sweep. Now what I did, the second step I did, is I hopped onto the 15-minute. So if I find out where that is, it's right here. Before making a sweep that will be respected, that's not a liquidity run, it forms a fair value gap. This is a pretty big fair value gap. Usually it's a little bit smaller, but just know that it forms a fair value gap. Now this is the part where you have to be patient. You have to wait to see the reaction of this fair value gap. So if it gets inversed the way it did right now, we can assume that this is going to continue going up to the highs. So I would have placed the trade around like this. I would have placed it right here, and I would have targeted this swing high right there, 2.19 risk to reward ratio. You wait for the fair value gap to be swept. Inversed. Another thing you could do is wait for a break of structure on the 15 minutes. If there's no fair value gap, there's going to be a break of structure. So look, let's hop onto the 1 hour. Okay. Let's hop onto the 1 hour. We see this prominent high right here. This is the exact trade I took. I saw a prominent high, hopped onto the 15-minute. Before it made the sweep, where did I go? What the fuck? Okay, yeah. Where is it? Okay, see over here. In this case, there was no fair value gap that was formed before the sweep. Actually, no, there was right here. So I entered a little bit early because this was more down here. I've seen a break of structure on the 15-minute, and this candle, while I was entering, was like moving really strong. It had a really large displacement, right? So I was like, okay, most likely it's gonna keep going down. I targeted this low. I could have even targeted this low, and I would have hit my TP still. So it's like you have to wait for a large displacement, B, a fair value gap to be inversed, or C, a break of structure on the 15-minute. If you could do all of them, you'll have a high probability liquidity sweep. So let's look at another case right here. This is one I didn't trade. I thought I don't think I was active. What time was this? Yeah, this was 1 a.m. I wasn't active. So here, if we look at where I just placed the line, do you see this line? The line is within a fair value gap. I believe it was on the 4-hour time frame, or somewhere around there. Yeah, 4-hour time frame, fair value gap right here. So if we hop back onto the 15 minutes, so you find the trade here. So right here. This low, this prominent low, and this is my strategy, by the way. There's somebody on my Discord server, which is free. They were asking me, what is your strategy? This is my exact strategy. So I waited for this liquidity to be swept, or I would have waited for this liquidity to be swept right here. And then I would see this strong movement on a 15-minute go up, and then a break of structure on the 15 minutes. So I would have placed my long here. That's what I would have done. Put my stops here, and I would have targeted swing high right there. I'm usually more picky. Like less greedy with my trades, but this was the trade I would have taken. I could have placed it over here too, my take profit, but I'm using the power of foresight, so I guess it's a little bit cheating. Here's a short. So this trade I took right away off another trade. So off the bat, I made one trade and I made another trade. So in this trade, I seen this low get formed. This was a very good area, by the way. There's a lot of movement up and down that just kept just allowing for proper trades. Usually you're not going to see trades like this, like these areas. So I was just taking advantage of it, just trading a lot. But usually you won't see these many back-to-back trades. So here I seen this low right there, right? I seen this low. It was within a fair value gap. This now went through, boom. I marked out an FEG, and then it inversed the fair value gap. I placed the trade off the inverse. I've targeted these highs. I usually target the highs on the 1 hour. So I could have targeted either this one or this one. I originally targeted this, but I just saw they kept going up, so I just like kept pushing it back while trailing my stop loss, and I took profits here. Let's hop back into the 15 minutes. As soon as I took profits, the liquidity was swept. I noticed, like I said, a large displacement, and it also inversed the fair value gap. I did not wait for this inverse of fair value gap because I saw the large displacement. I placed my trade, and I placed my trade, and I targeted. I don't even think I targeted here. I think I might have misplaced that when I was showing. I targeted around like the middle of the fair value gap because I was expecting like a movement upwards. So I targeted this and it didn't move back up. But yeah, another trade somebody could have taken is they could have waited for this long displacement, and when they saw that it moved back up, you could have entered off the fair value gap right here, right? And then you could have kept going down. There's a trade I took like that recently, so I'll show you guys it. This trade right here. So if we hop onto the 1 hour, I think it was this one that is swept. Yeah, this one is swept. So I swept it. There was a large movement downwards. Bang, I placed my trade, right? And then created a fair value gap. I placed my trade. I targeted this swing low right here. And plus there was a fair value gap right there that I was a little bit wary of. So I didn't want to touch into it. So I placed it just below it. Just above it. I saw the move down. And then I seen a reaction off of this fair value gap right here. Upwards. Started moving up. So I was pretty confident with my strategy. I know what I'm doing. In this case, I knew what I was doing. So I waited for a retracement back up. You know, I was fine with moving back a bit. And then as soon as I seen a break of structure off the fair value gap, I entered into another trade. So I took double the I took maybe like 3.8 and then plus 1.82 added up. I'm too lazy. I took that much risk to reward ratio. It's a 15-minute video. So literally that's all it is. You guys don't need some bullshit like advice. You guys don't need anything like somebody lying to you. I'll keep it a buck with you. I might have explained it a little weird. I know it's a little sus how I couldn't find examples. I was just kind of nervous, you know. Raw footage is kind of nerve-wracking a bit. So here, I'll give you guys another example. This is a trade I'm taking right now. So I was on the bus and I was doing like this competition for FXify. They have like these competitions, and low-key I didn't trade at all until like until yesterday night. And this was the yesterday night trade. I woke up to my take profit being hit. So I was like, damn, right? I have to get into another trade. So I set up a trade while I was on the bus. It was off session. I know it's bad, but usually trade in session time because there's more volume. But what I've seen is there was a liquidity sweep right here. It was a little clunky, but it was still a liquidity sweep. So I placed, wait, this is 1 hour. So I waited for a break of structure. Wait, I kind of made this one crooked. I waited for a break of structure and I targeted just above this fair value gap because this is kind of a scary zone right here. As you can see over here, this fair value gap got inversed, but then it created another fair value gap. So this is a double fair value gap. Most likely there's gonna be a lot of movement touching into there. So I'm placing just actually maybe up to here. I'll change my take profit later on just to have some wiggle room. Here this trade I took a little bit late, so I noticed this sweep already, and then I was just waiting for just this fair value gap to be filled. I seen that it was filled. I could have placed a trade right here actually too. Wait, wrong way. I could have placed a trade right like this and then targeted the lows. But to be honest with you, I did not feel like doing it yet because I was not sure. So I waited for the fair value gap to be filled. And then I placed down another, like I saw there was another fair value gap. So what I did is I traded based off of the reaction off it. So yeah, I did not wait for a break of structure because I already knew that there's a large movement now downwards. So I traded off that. I targeted this low right here. And then boom, I woke up to some profit. Literally, that's all it is. Super simple. Don't get it twisted. It's not as hard as people are make it seem. All you gotta do is wait for a sweep, retracement into the fair value gap. If it does not like inverse the fair value gap and it just keeps going back up, then bro, it's gonna run through. That's my strategy. If it does not what's called inverse the fair value gap, it's gonna run through the liquidity. So do not be looking for shorts or sells. Oh wait, same thing for sells and longs. Okay, don't be looking for them. Wait until the fair value gap is filled. Now this takes a lot more patience than usual. Sometimes like I'll be looking at the charts, I start going crazy. I'm like, bro, just fill the fair value gap. I've been looking at it for a few hours now, right? I've been trying to trade this for hours now. Just fill it up, please. But that's the part of trading. That's where you have to get your mindset in the right place. You have to be more patient, and yeah, literally that's it. You have to be patient. Wait for the fair value gap to be inversed. Wait for possibly a break of structure if there's no fair value gap. Or if you see large displacement after the fair value gap got swept, the fair value gap, after the liquidity got swept, you don't need to wait for an inverse of the fair value gap. That's all it is. if you guys watch till the end of this 20-minute video of me just explaining this, then respects to you, bro. You guys are gonna start getting profitable. I appreciate everybody that's watching these videos. Free Discord in link in bio. So here, let me just show you guys a little sneak peek. I call these trades out on the Discord server too. So we usually just talk. See, this is the trade before. This trade is this one right here. So I call them out. It's free for now. I think it's gonna be for free for a long time. And we just talk. We give each other advice. I have a section. First of all, yeah, free course as well. Go check that out. It's like a video about it. I have free sauce. I drop like videos that helped me out here. People tell me to drop videos that help them out here too. Literally, there's no reason why you shouldn't join. There's even a little guide here if you're a beginner. There's no reason why you shouldn't join. We just talk about stuff. We teach each other things. You know what I'm saying? There's no reason why you shouldn't join. Anyways, throw that aside. I appreciate you guys a lot for watching this fully. And good luck to your journey, man. Like, join the Discord and let's communicate. Let's have our journey together. And see you, man.